Look, what's happening on the gas side is something that goes beyond the recent impact from the hurricane season. The market is looking beyond, so probably on the impact of November 2020 election and the outlook for the energy complex, particularly on the shale gas side. Obviously, Biden victory will be meaningful for the U.S. petroleum complex, both on the gas and the oil side. In terms of demand, what we have seen now, demand has recovered. There is this last 5% of demand that is still difficult to recover in full. As you said, unemployment could have an impact on the demand for sure. But even if employment numbers go back to pre-COVID levels, we believe that actually the COVID-19 might have introduced a structural break in the relationship between GDP growth, so everything that is related to the economy, and oil demand growth, with the slope, meaning the relationship between the two, going down from 55 basis points to 44 basis points. So for the same level of growth in GDP, employment, you might have still lower demand numbers.
Francesco, what's been interesting is even though we've seen the headline energy price begin to move, it feels as though the oil majors themselves are not benefiting significantly from that. And obviously downstream, the oil services sector also not really seeing a significant uptick in the share prices in that sector. Is there a point here where the market begins to focus on any valuation gap based on where we're going on the headline prices?
Sure. Again, on the downstream side, as for the rest of the equity space, investors tend to look in the future. So what's happening actually in the downstream space is that over the coming years, you will have a lot of new refining supply. So probably the refining business, the growth, the additions in the refining unit will outpace demand growth. So this will put downside pressure on refining margins, which are already low for now because of the withering impact of the pandemic effect and the unprecedented inventory builds in the petroleum space, now particularly on the product side. So for the moment, the downstream space could remain under pressure unless, there is a wave of closures, unexpected closure, and refiners are able to lock in some of the uptick in the margins, particularly if there is a violent hurricane season in the next month.